Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Now before I start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work because I think you deserve to have that. So with that, LME 3-month copper. Despite last week's dip and run lower, prices overall have continued to move higher, with a higher low last week than seen 3 weeks ago. The main pattern here remains the dark blue July 22 to January 23 shallowy bullish shift pitchfork, which though pierced back in April this year is still running this market higher. We are at this time in between the dark blue middle time below, which is currently at 10,484, and the dark blue upper time above, currently at 11,605. Below and over the dark blue middle time is the green, just moving over the green, the dark blue middle time is the green short medium moving average, currently at 10,588, which might provide some additional support before any real test and attempt down to the middle time. Now 4 weeks ago I asked this question, and I quote the question, a quite large question, as to whether the whole action since the low in April is perhaps a very large bullish halfway hesitation. If that is to be the question, if that's to be the case, then we could be looking at potential as high as between 11,400 and 11,500 area. End of quote. This seemed a reasonable question at the time, and we did try higher in late October, though not far enough back then. The question we have now today is, does the market still have the incentive to try that high? And the answer, as it seems, is possibly. You see, we're at the crossroads of two possible patterns right now. So you see, we could look at the whole late September to date action as a possible head and shoulders pattern, usually seen as a bullish reversal pattern, though there are bullish head and shoulders continuation patterns as well. Or do we look at the same action as a nascent bull channel? Now I've not highlighted the neckline nor the bull channel on my daily chart, but I do note last week's bearish actions pierced the neckline, which is currently at 10,785. Though today we are back over it. Last week we only saw two separate closes below the neckline, each one separate from each other, and one of them was just barely below it. As I said last week, and I quote, about this pattern, this may repair itself or it may cause a realignment, but we are still early on in both these patterns. And that's the end of the quote. And this is still the case here. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one with another, all happening at the same time, all affecting the market in their own way. And I had hoped that they might sort themselves out, but so far this has not proven to be the case. Of all the features, by far the most consistent one has been and still is the bright red shallowy bullish shift pitchfork for the mid-December 23 to late July 24 move. Prices are right now a little above the bright red middle time, which is currently at 27.35. Above this are two supports. Below this are two supports, venerable supports. 27.53. Which is the November 2015 to March 22 move, which was an effective cap back earlier this year, and the green rising short medium moving average below, currently at 27.77, which had been good rising support during this past summertime and late last week, was a key support, and by being so may have created a horn bottom over last week. Now, if this new pattern, this horn bottom, were to work, then we would see a primary potential up in the 28.72 area and a secondary hardest reach potential up in the 28.87 area. However, these are just potentials now, not targets, as the pattern has not yet been fully justified. And to do that, you would need to have confirmed closes over 28.30. But, as this could still be a sharp move higher, and happen between my weekly commentaries, I thought it best to acquaint you with those potentials, just in case. Now, there are overhead some old trendline extensions that had in the past been valid but now seem redundant, notably the lower bull channel line for the mid-April to mid-August bull channel, currently at 28.75, and perhaps the steeper late September to mid-November bull channel, which is currently 28.50 to 29.76. I don't rate these anymore, but it would be foolish to just disregard them, or discard them even. Just remembering their levels is important. This brings me to the analysis of the action over late October through to 2 weeks ago. This is a triple top, which gave a primary target in the 28.02 zone, which was reached this time last week, and a secondary, harder to reach target X1 down at 27.62, below the green short medium moving average. Now, I will keep this target X1 on my daily chart, as there is a possibility that the potential horn bottom, which I just spoke about, formed last week, may actually become a bear flag, in which case any targets on the downside would be further validated. In the case of target X1 then, as I said last week, and I quote, should prices achieve target X1, then we shall have to see if this triple top will really become the top of the market, and should we look lower, below the congestion formed during mid-October between 27.36 to 27.99, down there we have the April 2018 high at 27.18, which was effective as resistance during early 2025 before we reached the medium moving average. That's currently at 2700, and the congestion between 2666 and 2683, and that's the end of that quote. LME 3-month lead. The key pattern here had been, and perhaps even now might still be, if it is sufficiently repaired, that is, the original rectangle pattern that developed into a quite shallow bright green early August to mid-October bull channel, and is currently 2003 to 2052. This had earlier in October been breached on both sides, but it was the substantial breach higher, not a break you understand, but a substantial breach higher late 3 weeks ago, followed through higher 2 weeks ago, only to be stopped by the 50% Fibonacci line of the May 24 to April 25 move at 2098. Though I have no doubt that the high seen back in March this year also played a significant part. Then back down again 2 weeks ago, and late last week a breach lower, below the bright green lower bull channel line, and all the moving averages, where we seem to have started the process of stabilizing below all of that. All this action left behind a late October to late November V-top pattern, a V-top. And we are seeing the results of that pattern, especially with the move below the closely packed moving averages between 1999 and 2012. That's how close they are together. There's one that's on the upside, the very short one, but I'm talking about the short medium, the medium, and the long. Thus, and between those two levels, and below the concentrated congestion of which I have often spoken about, which is up there as well, which is 2001 to 2003. That's an important congestion area, and please remember it. Thus, what is holding the market up, and it's a reasonable support, is the June 23 low at 1976. Below this is the next significant support, which is the 50% Fibonacci line for the whole of 2025 at 1971, and then the very important bright red neckline extension to the August to December 2024 head and shoulders pattern, which is currently 1962. Now this last one is very important as it held up the market in October, August, July, and as far back as May, and it will tie in with the next piece I have to say. It is the one additional point I would like to make, and is a point I've been making here since the start of this year and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very large and rare annual key reversal down here in LME 3-month lead. Hence, even now with prices a couple of weeks ago shooting higher than the start of the year, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.